name is Pouyan, founder of GBC, and we are having ALLEN LAU today as a founder and CEO of Weplus. Thank you so much for being here, Alan.
Great to be here.
Really appreciate. And our viewers, they really eager to know that what is your background, what you have done, and what is Weplus and Colony Capital and so on, which we will talk about that in continue.
In 1999, I finished my MBA from Chicago, University of Chicago.
Yeah.
Came back to Hong Kong. I worked for Bing and Company, which is a great strategy consulting firms, for 4 years. And during that time, I mainly focused on private equity, TNT, fast-moving consumer products,
nice.
and so on and so forth. So we have done quite a bit of program during that time. So learned a lot in the 4 years. And after that, I joined a private equity firm. It's called the EQT, and the name in Asia is called Investor Asia. I was there as a VP for 2 years. Then I joined Colony Capital, one of the biggest real estate private equity funds in the U.S. Has been with Colony since 2005, end of 2005, until 3 years ago, 2015. I started my own company called Weplus. Weplus Co-working. It's now been 3 years, and we have about 50 space in 16 major cities in China. Outside of China, we have San Francisco. We also have Helsinki in Finland. We'll open another one up in probably in Melbourne, Australia, end of this year. So.
Nice, perfect. Today our topic is fundraising in China. But before getting fundraising in China, so definitely fundraising has kind of principles for itself. So we want to ask some questions about that, and Alan is going to let us know about his opinion and how it is, and definitely his opinion can really help a lot of startups to go through. So fundraising for a startup is the kind of challenging thing that many startups are dealing with. So how would it be, and a startup could come to investors and having a kind of impressive pitches? Yeah, how would it be? What is the most impressive features of the startups? How they can impress those investors? I just want to start with this example, which can give a better kind of explanation about this topic.
I think everyone have different theory about fundraising, and I have to be honest, I'm not an expert in VC or angel investing. Colony, my background is in private equity, so most of them are dealing with mature company. Well, however, we started to invest in startups since about 6 years ago. 6 years ago. In China, mainly in China. In the U.S., we still don't. We pretty much invest in a mature company. But 6 years ago, we is on the verge of mobile internets and just the booming of the startups in China. We felt that there was time for us to get into it and feel the market a little bit. So we have started a new funds, and it's Colony Yangzi Fund. Other than focus on real estate, which is our core business, we started looking at different investment to accompany our core investments. So we have invested in mostly internets, O2Os, co-living, co-working, a lot of contents, and most of them are supplementary to our core business, which is more of a real estate. So from our perspective, I think different fund, if you're talking different founding members or different fund, they have different angle to look at. Most of the VC fund are focused on certain sectors. Some of them are in biotech, healthcare. Some of them is probably specialized in O2Os, big data, and so on and so forth. But I think the common ground is that firstly you have to have a sound business plan. Two is your founding members or your team, whether they are professional, whether the team can work together. We have a feel of that, and whether the business is realistic, your objective, whether you are passionate about the industry. And personally, I look at the founders, whether they are familiar with that particular sector that they want to start up with. So experience is also important for me.
So the background of the founder and the team. So let's go through, as we know that every single startup when we are talking, or every single company that we will talk about them, it's all about the product team, also the market. If their product fits the market, and if the team is able to deliver the product in the market perfectly. So the first thing that is catchy for you when startups coming to you, when they are pitching their company deck, so what is the most important thing? Imagine if there is a perfect product and the founder is not that much okay, or is not that much professional to have his pitch delivered properly. Do you consider about this ability?
Probably not, because startup, by definition, many of them fails.
Yeah.
So to pick a winner from thousands and thousands of startup company is difficult, and sometimes is by luck, I think.
By luck.
But one of the things that we always look at is the founder, because people, there's a common saying that you invest in people, not the product.
Not the product.
Right.
Right.
So whether you can work with this particular founder, whether he's honest, whether he's upfront, open to new possibility, whether he can work with other people. I think all those are our consideration when we select a target. And of course, product is important, but also there's another perspective we always look at as the competitive landscape. Who are the players in that space? How are you different with the others?
So you're basically talking that how data startups can have a kind of differentiation in the market by their product. Yes, and if that differentiation, or if their product has a kind of differentiation from others or from other competitors, then you consider about that. Imagine if that startup coming with the kind of product and there is a big competitor, or there are several competitors the same as that product. So what would happen? And you like the guy, you like the team, you like sort of the product. What would happen? Would you?
You passed.
Yeah.
Because basically you figured out, you look at your own resource that you can provide, not just money, but what you can provide to the startups, and you compare to other players that are already in the market. Then you ask your question whether you can win.
Yeah.
In this race, and the chances are slim. Then no matter how much I like the person, or how good I think the products are, the opportunity is probably not there.
What about this case? I'm coming with different examples, because then your answer is a golden answer with a golden value for us. Let's say that there is a startup, it has a product, it's incoming, yet it has kind of several competitors. But if you think that you invest in that company, in future, other competitors, maybe they acquire this company, then this is a big profit.
Sure. Acquisition is always a outcome for private equity investment or VC investment. And as a matter of fact, it's probably the biggest exit opportunities. IPO is good, but it's challenging, right? So
it's not
acquisition is, what we call trade sale, is probably one of the most common use exit way that we look at it. So the value of the company is one. If it's by acquisition, is two things we look at. One, whether you can get to that size, that you are one of the key player. So other people have no choice to do that merge, right? That's one of the reasons. So whether the team and the product and the market side, that market share they are already in, whether they can get to that stage that become one of the key players. So size, scale. And second aspect is whether you have a unique technology which are much more advanced than others. Right. And so instead for them to develop the technology for a couple of years or 3 years, might as well just the better option for them is to buy you. Right. So that's another option. So you still have to look at the company itself, whether what is unique about that company. It's the technology, it's about the team's execution capabilities. Right. One can allow you to get to a certain scale, which positions to for sales. Second is you have a short window of opportunity. Technology, I think advancement is there's a window, right? No matter how good they are, they could be copied. Someone will always come up with similar ideas, and see model technology. It's a matter of time.
Exactly. Actually, I was about to ask you. You talk about the technology. It means it kind of unfair advantage that startups or that company has to come up with a kind of technology which it can differentiate them from others. So, as you said, how is it if it's supposed to be copied easily? So it's a kind of red flag. Yeah.
Yeah. If that technology can be copied easily.
What about patenting then?
Well, patent is one thing, right? Patent.
If the guy come up with the technology and with the patent, then it can be easily.
It depends how strong the patents are, right? I mean, there's other competitive technology, whether that technology is unique.
Yeah.
For example, you say you can come up with a manufacturing technology, we can allow you to save raw material costs for 90%. Nice. Okay, that patent is worth something. But they say I can save 5%. Someone will come up with something that can also save 5%. That's not that difficult hurdle to overcome. So it's about how big the hurdle that you're creating with that patent.
Exactly. So let's go through those international startups that they want to get in China. Most of them, well, the trend is so high. Many innovation centers of countries coming to us, and they want us having roadshow for them for their startups because they've heard that Chinese investors, they invest in international companies based on China's new policy of being international and innovative. So how do you see for international startups to get in China? Do you think for them it's easy to get funded from Chinese investors?
No, it is not. I think it's very challenging. I think it really depends. You need to know what is your advantage. By and large, in China, most of the renovations or startup are in business renovation. So business model, for example, right? Uber, right? So once Uber came out, we have Didi, right?
Easily,
boom, you copy that. You have WeWork, right? And now we have, Weplus, all that. So business renovation is not an advantage. I mean, Chinese people are great in business. They've been doing
models.
They have been doing that for 4,000 years. So if you think that you have a new business model that you can take advantage of this great market, challenge. It's very challenging. If you look at the old eBays, Yahoo, most of them are no longer here.
It's so interesting because some of them they say, okay, if you have a big money, you can, easily get into the market. But look, as you said, the Uber, don't you think that they didn't have enough money, or some others? They
Yahoo
had enough money.
eBay, they have their.
What is the barrier that they cannot go out or they cannot grow like being big as like Alibaba or Tencent? They can be a big player in China. Is it something wrong with them? What is it?
I think there's a local flavor to it, right? You're competing with some very smart people, people that have great resources. I think a business model depends not only the logic of the business model, but what kind of resource that you can put in, right? And local player will clearly have a big advantage over that in terms of policies, political support, local resources. So for you to compete with a local brand just pure on business model alone, I think it's very challenging and if not impossible. So what we don't have in China, I think, by and large, is the infrastructure, technology. Right? For example, in blockchain, before this technology is 100%. I mean, right now it's still in a very early stage. But Chinese companies already come up with thousands applications. Right? They all been thinking about what kind of business application to it. But however, on the opposite side, they have not spent enough on the technology, how to better the technology, how to advance the technology. So I think that is probably the great entry point for foreign companies.
For like being really deep in technology and having a really high-tech product that they can come up here. And one delicate point here is that like German car companies or many American companies, they got in here and they had a JV. And they started with Chinese and go on, and they are enjoying from the big market that they have. What I am thinking that most of the startups, they coming here for having investment, but I haven't seen that any startup coming here and they want to have JV, or they want to just get the kind of Chinese company, join with them together, which they can cover perfectly to attract more resources, either financial or market, whatever. I haven't seen. Don't you think, like, let's say Uber, if they would come in China and they would get a kind of JV, or let's say even Google,
Right.
if from the first move that they had in China, if they would come and say, hey guys, why not one of your company come in and have a JV? Most of them, they want to play independently.
Right.
They think that they can cover. How is it right or wrong? And I mean,
Well, there's no
your-
right or wrong answer
Yeah.
to that, right? I mean, that depends on what's your core, competencies.
Yeah,
For Google, I understand why they want to be alone, because there are a lot of technical aspects
Yeah.
which they do not want to share
Exactly.
with the local. I think that's understandable.
but they're losing a big market though.
Well, yes, or not, but
Oh well, their trade-off.
yeah, there's a trade-off.
Yeah.
There's a trade-off. Clearly, Chinese market is one of the biggest markets, single market in the world,
Yeah.
other than the United States. Is a market that nobody want to ignore.
Yeah.
But at the same time, there is price of doing business here, and it depends on what stage of your businesses are, whether
Yeah.
you were willing to make that sacrifice.
Yeah.
And I think for startup, again, I think it really depends. You have to make that calculation yourself. There are JV that I see, for example, in our Weplus Finland space.
Nice.
That space is more of a gaming vertical, so a lot of gaming companies is working in that.
Out there.
And most of them have a objective, which is to expand in China. And I have seen two companies that already have a JV with a local company here.
Nice.
And how well they play out, we don't know yet. We'll wait and see. But I think from a logical perspective, it makes sense, right? And if we are willing to invest in for example, a gaming company in Finland, a small company, I think probably one of my objectives is I'm going to position that company to be merged with one of the bigger company, BAT or so on and so forth.
Nice.
So before they make the investment, I have to understand whether there are synergy
Okay.
for this particular products
Right.
with the big platforms here.
Or not.
And I think we are probably in a better position to make that assessment than the founder in Helsinki, for instance.
Yeah.
So I think those are the things that we can bring to the table.
Yeah, so it seems that international startup, if they want to be here, they can sort of bring in other values. Because most of them, they're thinking, okay, either we get Chinese money, Chinese investors' money, then we get back and we go global. Or they come here, they think, okay, it's a big market, we can sell a lot, which I think that it's kind of shady. I mean, I don't think that they can do it easily. And what is your what is your advice to those international startups that they get in here? Is it about should be about their team, should be about their product, or should be about their?
I think it's about their strategy. I mean, like you said, is that the global strategy or is the China strategy?
Right.
If you focus on the China strategy, you have different way. You find a JV partner, you find local money. But if you're looking at a global play, then you will be very selective in some of the Chinese money. They're willing to allow you to do that because a lot of Chinese money is not. I mean, I have to say, VC investment in China are still premature if you compare it to U.S. And even Europe. We're still in the early stage. So I think most of the funds that when they invest, they look at whether there's a China angle that they can play. But there's also fund that, for example, we just started with some partners more of a blockchain fund, which invested in company that focus on blockchains. And the company that we are currently looking at is foreign company that is focused on a global market, not only in the China market, and focused on technology, not in applications. So it depends, what's the strategy for that particular company and what sector they are in. It's different. For example, in gaming, clearly, Chinese market is huge. So the priority is probably how I'm going to sell this market. For example, how Supercell can make that $8 billion sales to 10 cents, for instance.
Yeah. How, the international startup, when they get in here, is it important for Chinese investors who is the team? Are Chinese investors considering to see a Chinese citizen person or someone who has a Chinese heritage to be in the team or not?
I don't think that's the key concern.
Key concern.
I think it's what they can do with the Chinese market. If you're looking at the Chinese market, whether you can do that yourself with the team or you have a strong partner, we can, as an investor, I can provide you.
Yeah.
I think most of us are looking at that kind of investment. We already have a partner in mind. So we make that investment, we'll tell them to partner with certain people that we also invested in. Then you have some great synergy, right? But not particularly looking at person that are the founding member with their Chinese heritage. I think language or culture understanding is not an issue now. 20 years ago maybe, but now very global. I think China is very global also.
Yeah, that's a beautiful point. But in another side, we see that, okay, if you can communicate with Chinese investors well, seems that Chinese investors, I mean, especially in angel level, they have kind of different approach. First, they should have a good feeling about you and your team, yeah? Right. But if there is no, imagine if their English is not as good as it should be, and the teams, international startups team, their Chinese is not as good as it should be, so there is a kind of miscommunication. Do you think that communication between the startups and investors, I mean Chinese investors,
well, you definitely need to invest in that, right?
Yeah.
I mean, you can have a guys in the team that speak language. That's the basic respect if you're looking for Chinese money, right? I mean, you can't expect coming here speaking Russians or Germanese and hoping that we can understand. But at the same time, who are you selecting as investors are also important, because if you just look at pure money, not resource, I don't think you would do well.
All right. One technical question, and that technical question is if an international startup or company come in here for like raising fund, and if the money is RMB, so what could be the best solution? They have to establish a Chinese company, get the fund, and then they have to have their how it works. I mean,
I think you need to start up. You have to establish Chinese entities. If there's an RMB fund, so you probably have a separate division which is more focused on the Chinese market or China operations. You don't have to be the headquarters, but you need to definitely have a WOFI or JV structure before you do have the RMB. It's difficult to get, particularly in current situation, very difficult to convert RMB to foreign currencies.
Yeah. Have you had any cases, any company that you were supposed to invest, but because of the structure, it didn't happen?
No.
No, you didn't.
No, I have not. We have not seen that. We don't invest a lot of foreign entity, so far no. But yes, the one that we look at the investment, most of them will have them establish a presence in China, and we'll invest in the Chinese entity.
Okay, the Colony Fund that you have, which is Yangtze.
Yeah, Colony Yangtze Fund, which is RMB
the RMB fund.
Yes.
Yeah.
Colony Capital is the American dollar fund. So
it's a USD fund, and the Yangtze Fund is the RMB fund.
That's right.
And so on. It's perfect. So let's go through how you yourself came up with the idea of Weplus. What happened?
Well, I think that's a classic example of this business model. We learned from WeWork. In 2014, we're looking at the opportunity to invest in WeWork, and at the time that we can't pull the trigger because we are not comfortable with the valuation. But at the same time, I look at this model and said, well, it is a great model for the Chinese market also.
Nice.
There's no WeWork at the time in China, and I think
like 3 years ago.
That's about 4 years.
4 years ago.
2014.
Yeah, just WeWork just showed up like 2 years ago.
2015.
Yeah.
For the end of 2015.
Yeah,
yes.
exactly.
But in 2014, we looked at that market and I say, hey, this is a great model. We can do that in China with some Chinese twist to it.
Yeah.
If you look at Weplus, it's not a copycat of WeWork.
Yeah. It's
from day one. We really focus on company, not, it's much more of a to B market, not to C, which is very different than WeWork, because WeWork at that time, 53% of the tenant are freelancer, right? So freelancers is a big component of the WeWork model a few years back, which has changed now because they're getting big. We look at it from day one, we say no, in China there's no freelancers.
Yeah.
But there's a lot of small, medium company, a lot of creativity company. That's what we focus, creativity company.
SMEs, yeah.
Not just SME, but SME that is in creative business. For example, designer, renovations, internet, professional service. Someone that have more of a new economies, not the traditional manufacturing, trading, that kind of thing. So that's what we focus on that particular sectors. So we started the company in 2015. So far we're doing well.
Weplus was the first in that case, because there are some other companies which I don't mention. They have many branches as Weplus, but
we're the first global expansion. Yes.
Yeah.
We're the first one to open office outside of China.
Yeah.
As a Chinese company, we opened our first location in Helsinki, 2017, January 2017, which was the first.
2017.
Yeah.
And you mentioned San Francisco.
San Francisco, we just opened.
And Melbourne
is probably towards the end of this year. So we're still looking to finalize that deal.
Nice. So how did you come with the name itself, Weplus? Because it's outstanding. I mean, I was talking with many people, because I don't want to talk about other V whatever.
Right.
So, but seems that
it's interesting. It's just
is outstanding.
It came up from a dinner. We were thinking about what kind of name we use, and then we're sitting there, we're having dinner, and we chit chat and say, you, me, together, we, but that. Together we got a lot more.
Awesome.
Weplus. It's just not only about the people; it's also space.
Yeah.
Our slogan is more than space.
Yeah.
Right.
Exactly.
You do more than just a physical location. It's a community. It's a social location.
Yeah.
There's a commercial element to it.
Nice.
It's what we call. We really focus on this social work environment.
Yeah.
We want to create an atmosphere of people that can communicate, they can discuss, they can work together and cooperate. And that kind of atmosphere is what we try to create. That's why we selected for looking at, when we do our global expansion, is looking at a city that has focus on innovations. For example, Helsinki, which is one of the very, great, innovative society in Europe.
Yeah, I heard about Helsinki and the trend of entrepreneurship and things are happening there are really cool.
Slush is amazing.
Slush is amazing. It's a kind of startup communities which are connecting a lot of startups to many resources which can bring a lot of leverage for them. So, like Weplus is you did acquire any other co-working spaces, or it's just
we haven't.
Weplus
co-working. Co-working is another brand. We did a merge last year.
Yeah.
With a smaller players in southern China.
Yeah.
It's pure from a strategic perspective. One is creative scale. Two is expanded to the southern market, which we don't have a team at that time. So that's the merge that we have done. So other than that, we haven't done much of acquisition. I think right now it's still in an organic growth stage.
Yeah.
I think most co-working operators in China are relatively in an early stage.
Yeah.
I think it's too early to talk about merge yet.
Yeah.
But I'm sure that will happen.
Yeah.
But at least in the next 12 months or so, we're still focusing on organic growth.
That's beautiful. Perfect. There are a lot of co-working spaces are coming up like mushroom. Small and big and so on.
Yes.
I think
small mainly.
Yeah, small mainly. So it's the talk of having big players at the end. What do you think? How many big players you will have like in 2 years? Like 5 or 4 or 6?
I think in this space, like any other industry, there will be some big players. I think in China it's probably 3. I think in 2 years' time there will probably 3 to 5 at most bigger player, which together will probably dominate 50% of the market. It's not going to be 90% because this is a 2B market. It's very local. So you're dominant in China, in Beijing or Shanghai. I might dominate in Guangzhou, Shenzhen. I don't think it will be national player, right? 2 or 3. But
do you think one of them could be the international one, or
all are? It could be. It could be, but it will be one of the biggest players, but they will not be the biggest player.
Oh, okay.
You mark my word, right? So let's say that they are an international player here right now.
Yeah.
I would say in 2 years' time they will be one of the biggest, but they are not going to be the biggest.
What is missing about internationals? I mean, why
resource.
They cannot be resources?
Local resource, cost structures.
What about Guangzhou? Matters, or
yes, it matters to some degree.
Yeah.
But I think China has gone a long way from 20 years ago. At that time, guanxi is everything. Today, it's not. Guanxi can get you in the door. But in the end of the day,
Open the door.
Yeah, you can open the door for you for certain things, but it's still
cannot survive.
Exactly.
Yeah.
It's not the sole reason for you to grow.
So you should deliver a value to the market, then you can survive based on that.
Yes.
So let's talk about your incubation program, which is really close to our topic. I mean, we've heard that you have a kind of incubating program in Weplus. What exactly is about, and what kind of companies they can fit your criteria in that program?
Weplus incubation is very selective. We first of all, we believe that we are still majority in the real estate business. We have this new what we call new spaces. So that's not only about office, it's also about co-living, it's about commercial, all that. All right, so because we think with today's world, the line between working and livings and shopping, the line is getting blurry.
Overlapping,
it's very blurry. So mixed asset, mixed compound, innovative mixed product is where we focus.
Nice.
So when we just talk about incubation, we talk about content that we can provide to those assets. And that's where we focus. Entertainment, furniture, office design, innovative renovation technology.
What about healthcare or fitness?
Not at this point. Fitness maybe. Selective fitness, yoga studio maybe. But whatever can provide and bring in the peoples.
Nice.
To a certain asset class is what we focus.
So it means that your incubating program just go through those companies that are really bringing value.
Yes.
I mean, beside that they are running by itself, but in the same time they are bringing value for your ecosystem.
Completing each other. And I think those are very important to us. But in the same time, with our scale, our 16 key cities, or in the city center, what can we provide for those companies to grow? Right. For example, you have a great idea, you have a very entertainment, you have a yoga studio, which is very different, very high end, very chic, but you need spaces.
Exactly.
And certainly, I give you 16 cities, 16 space, and overnight you become a national brand.
Wow.
Right?
That's awesome.
So that's what we can provide.
So I have to go and open a yoga studio, then come into you.
just as an example. But that gives you an idea of where we are.
Perfect. And then, so imagine that if the startup is not having that much relation with your community and so on, how do you
what value can we bring to? Definitely. I mean, other than just incubation, there's a lot of value on this platform because right now we have about 1,500 small, medium company and large company in our platform. It created a cooperation environment where you can cooperate with other small company. You can provide business service. I think there's a lot of advantage to that.
One of the beautiful thing I know about Weplus that your pricing policy, it really helps entrepreneurs or SMEs to stay in your spaces and they enjoy the community as well. And then how much do you believe in the community?
I think it's a very important part of what we do. I think that's the beauty and essence of a new space concept. Community is clearly a big component of the space program. You imagine a environment where we are not just labor, but we can actually have we're social friends. We have common interest groups. That kind of stuff. Like I said, the line between living, working, and social is very blurry, and we're providing that what we call a social work environment.
Nice.
Not for everyone, but it is for the younger generation.
That's awesome. So let's say your marketing policy. We have an example. It's called diamond example. If you have a diamond in your pocket and you want to sell it under price, If nobody knows, nobody buy. But
That's
it doesn't mean your diamond is valueless.
That's correct.
So it's the same. I mean, if we look at Weplus as a kind of diamond, but the exposure and the marketing, how should it be that we tell every single person, yes, Weplus is here and you have to be in this, you have to have this diamond. So how much you want to have kind of focus on marketing as well, exposure, and how much you want to get through the media?
Marketing is clearly a very big component of
Yeah.
our business model. Scale and branding is
Yeah.
one of the two key things that I always emphasize. So we have a strong marketing team, so we're just getting our message out
Yeah.
there. We cooperate with different media also. So different, what we call the new media. We don't do a lot of commercial.
Yeah.
We don't do a lot of advertising. A lot of them is word of mouth and our what we call new media channels,
Yeah.
which is not only from our WeChats, our apps, but also cooperating with companies like you guys
Exactly.
and others.
Yeah.
That's how we get our message out there. I think the market's still in an early stage.
Yeah.
We're clearly a key player in that sector,
Yeah.
and we will continue to find an innovative way to promote ourselves and get the message out. I think it's about educating the market.
Exactly. Then, as a Chinese company, do you call yourself pure Chinese company, or you call yourself as an international company?
I think we call ourselves a Chinese company with a very strong international flavor.
Yeah.
Because most of our key management are educated abroad and came back.
Nice.
So yes.
So that's beautiful that you gotta go global from China.
Yes.
You're not a global company coming to
into
China.
That's right.
Well, I think that's the kind of a strong point of Weplus.
Yes.
Because if you can't do business in China, you can do business everywhere. It's a tough market. I
is.
can tell every single international startup wants to come here. So that's the tough market. If you can make Chinese markets done, then it's easy to do.
It's a tough market, but with great potential.
Yeah, with a great
So-
potential. You have to be completely ready.
Yes,
to
you got to
get
be ready
it.
for it.
Exactly. So based on that, my just few last questions. And what is your recommendation? What is your advice for all those international startups getting here? I mean, first of all, I recommend every single international startup getting to Weplus, getting familiar with Chinese community, also international community, because you are here to do some stuff in China. So it's better to get into some spaces that you have more involvement with Chinese communities, with Chinese companies and so on, to get more information and knowledge about Chinese market than being in other environment which is international is okay, but is not giving you any help because you are in China. So what is your advice for all those international startups when they get in China, how they have to get prepared and ready to get in China if they have any plan at the end? What is your...
Spend some time, get to know the market, get to know the people you're dealing with. I mean, like you said, a co-working space like Weplus is perfect.
Yeah.
Because it's not only you have international company, but you mostly have a lot of Chinese company.
Yeah.
So establish that relationship there, understand how they work.
Yeah.
You don't have to need a space. You just spend some time. I think a lot of foreign company come in here and think that they have a great business model.
they
can
have to
open
do
it. No, it's not.
No, it's
I mean,
not.
China is not 20 years ago, right? I mean, we have seen a lot. We have done a lot. We are probably one of the biggest economies in the world.
Nice.
So there's not much brand or product that we haven't seen in this part of the world.
Yeah.
So if you're coming here, you better be prepared. You better get your feet wet and understand the landscape before you can make a big move.
Perfect. Awesome. Allen Lau, founder and CEO of Weplus. Thank you so much for being here and giving
Great
your
to be
time.
here. Thank you.
Really appreciate it. Thank you.